Spotlight is on SBI Energy Fund. Raj Gandhi, who manages it at SBI Investments, is joining us now. Raj, afternoon. Thank you so much for your time. We are seeing some very phenomenal moves coming in the energy stocks, which are in the listed universe. And you are now
Sure.
going forward with the thematic fund. Talk to us about hypothesis which you have. What kind of energy fund would this be? Would it have a mix of upstream, downstream, and other? Talk to us about the investment thesis.
Sure. So thanks for having us here and giving the opportunity to reach out to the people. So see here, Energy Fund, largely the thesis is that, we are at a sweet spot wherein you have opportunity to make money on the traditional energy as well as new energy companies. So on the traditional energy side, what you are seeing is that versus the market generally being concerned about what will happen to these companies in a new energy scenario, and their cash flows. Here the cash flows of traditional energy companies are growing, largely due to the combination of reforms, policy impetus, plus under investment in select value chain like refining, power shortages, and all that we are seeing. So but these companies' realizations are much higher than what they were in the past. Subsidy in the system has been largely the companies have been able to recover from the market. A lot of efficiency gains coming in across in terms of manpower, number of manpower across a lot of PSU companies which are in the pack being down over last 10 years. So, combination of these three, the profit pool is in fact going up. And also what we are seeing is that the policy environment is becoming much more predictable from the perspective, let's say, earlier upstream subsidy used to be decided at the year end, you were not sure. Now we have a bi-weekly windfall tax coming through. So across the segment what we are seeing is that on the power side, if we see recently, there is a lot of clarity on the return ratios that the power companies will have, and most of it has been reinstated at the past levels wherein there was fear of cut. So across the spectrum what we are seeing is the earnings and cash flow growing, plus it becoming more predictable, which is driving the leg one of value creation which we are seeing. Interestingly, what we also see is that the leg two of the value creation will be when the money from the traditional energy is kind of used to build out a new energy business, which is where you are seeing NTPC saying that by FY32 the vision is to have green energy portfolio equivalent to fossil the portfolio that they have now. Reliance going for 5 gigafactories. So across the space, what we are seeing is that using India's competitiveness on the green energy, we are seeing the traditional energy cash flows being used to incubate a new energy business, which will drive leg to a value creation in these companies. So that's the hypothesis here. And also we see very fast clean energy basket emerging, and a significant profit pool created here, which we will intend to capture here. And also somewhat indirect plays on new energy like power ancillaries and all of those are a part of the universe over here.
Raj, fair point. I understand the improved visibility for the entire energy space. One of the reasons that you're coming out with the fund. I want to understand about valuation. The narrative about valuations is that if you look at the near-term last 2-3 years performance, some of these spaces may start appearing richly valued. But if you look at the next 2, 3, 4 years, the way the transformation scope exists in the space, how are you balancing both the sides and also arriving on valuations? At what valuation should we be doing some entry in these spaces?
Sure. So, per se, top-down basis, if you see the Nifty Energy Index, on a December ending trailing basis, it is still at 25% discount to Nifty. And, there are still a lot of stocks available around that 10x multiple range. So, we feel obviously in, today's market, there are pockets of overvaluation within any space, but we are confident that, within the overall space, there are enough pockets of value where we will be able to deploy and generate returns. And as well, like power ancillaries, we have opportunity of having looking international. 35% of the portfolio can be invested in international securities and funds. So I think broadly it's a more broad based theme here, which we think as a aggregate space, there are enough pockets of value within the space available.
Right.
And we are just at the beginning of the cycle in that sense. If you see, in terms of earnings or valuation, most of the diversified funds, if you see, are underweight energy. The benchmark weight of energy sector has come off significantly. So we've as in from the energy sector perspective, it's just kicked off performing over last 1 year, maybe after a decade of lull. So we feel we are at a good inflection point here.
Okay, Raj, we'll let you go on that one. Thanks a lot to join us on the show.